this process as well. So grab a pen and paper and let's get ready. What I'm going to do in this webinar is I'm going to show you the main problems that people face with trading, and more importantly, how we remove them. So we're going to remove them in terms of having one, not 10 strategies. In the hedge fund, we have 10 different strategies, but I'm going to share with you the oldest and first one. Okay, so strategy. Business plan, because you need to know whether or not it's worth your time, and then a process, because you need to know what you're going to do every day or every week. You've probably got a day job, you've got better things to do than just simply be staring at a computer screen or on your phone, tapping away. In actual fact, what we found is the more frequently people were on their phone, the more likely they were to make bad trades or overtrade, and therefore more likely to lose money. So it was far better that they placed a trade and then left it and let the system knock out the profit or take the stop loss or whatever. So we're going to teach you some of those little insights as well. Where does my knowledge on this all come from? Well, in part, actually, from this little international bestseller. Now, I wrote that for the Financial Times, about 25 years ago, a quarter of a century ago. And since then, I've written 17 other books. You can see over my shoulder. I set up a fund, a hedge fund, and then a private equity fund. The hedge fund was set up in 2004. And the private equity fund in about 2009, straight after the financial crisis. So I'm going to use my own expertise. And as many of you will know, I'm the author of Mind of a Trader, where I interviewed some of the world's leading traders. So we're going to use all of that information. Now, let's get on with it. There's quite a few slides I actually want to share with you. So like I said, please have pen and paper ready. Everybody can see and hear me. Steve, Michael, Tim, Charles, Mark, David, Lal, David, Ade, Dalian, Martin, Louis, Andrew, Olu, Sandeep, Tariq, Alfredo, John, Peter, Kumar, Mittal, etc., etc., etc. I'm not going to read everybody out. Let me also know which parts of the world you're from. Well, you've already done it. Andrew's written Hornchurch. Did I already ask for that? Sorry if my voice is a little bit stilted. I've got a bit of a cold, and under normal circumstances, I would still be in bed. But I did want to share some of these trades. And what we're going to be looking at is trading, of course. We're not looking at investing. We're looking at trading. In other words, how can we make more money than if we were just simply buying and holding? How can we make more money by dipping in and out of the market, and thereby also benefiting from the fact that if we're going to be out of the market for some of the time, then we're not getting so much risk. We're going to use a standard retail platform like this, which is free. All the data is live, real time, and free. And then I will, whenever on this webinar I show you or you see a green arrow, that means we got a signal to buy, which is part of the strategy, which I'll share with you. So I'll share the strategy with you. So that was to go long. Okay. Some of you will be familiar with this, but those who are new to the webinar, and if it's your first time, just put it in there, please. Mark from a Dutch guy in Romania. Fantastic. There. Okay. To go sell. That's to go long. And at the moment, we picked up on a very good long, which is the S&P 500. It's rallying away. And that's the point of the trading side of things. So we're not looking at 12 months from now. We're really looking at holding these things for a few days at a time. So what you need to know is, well, how do you know when to buy? How do you know when to sell? What's the process for if you've got a day job? How can you manage all of that and manage your time as well? Okay, so I'm going to do all of that. It's all part of my campaign for $1million.com, which is to teach 1 million people how to be better traders and investors. And I've been doing it since, well, 1998 is when that one came out. Actually, it's 1997 when Mind of a Trader came out. So this is just an extension into new technologies using videos, lectures, webinars. None of those things, of course, existed back then. Quick point. We are an FCA regulated asset management company. This is not individual financial advice. It can't be, because I don't know your individual circumstances. We do not market our services to the retail audience for the simple reason that as a hedge fund, you're not allowed to. It'd be a criminal offense. So there's nothing in here where I have a conflict of interest with you. We're not a broker, so I'm not trying to sell you brokerage services. We're not a retail fund, so I'm not trying to sell you, oh, buy our fund. Okay, I want you to learn what I wrote in this book. Now, you can go and buy the book if you wish, but you're probably better off just sitting here and listening to the webinar and taking notes, because it'll save you a hell of a lot of time of reading those 18 books. It's just we've modernized what we do. So let's start off with the problems and then the strategy, business plan, and solutions. Okay, and I want to try and run at a pretty fast pace as well. And if you've got questions like, are you not, what platform do you use for the charts? I've just used the standard retail platform. You could use any of the standard retail platforms, I tend to pick a free one because I don't want you paying for it. Okay, so I've used MT4, which just happens to be available on every brokerage. They give it to you for free. And you don't even have to go to a brokerage. You can go directly to them, and it's free, and the data's live in real time. And the reason I chose that is, well, because when I was writing my Financial Times columns in the Financial Times, I would try and save people money, you know, just like money saving expert, as it were. And I'd rather use a free platform than paid for one. So it's as simple as that. Okay, that was my guiding light. It wasn't that, oh, it's got some special bells and whistles. I've then added some of the indicators that we use onto there, but we'll come to the trading strategy. You can do it manually yourself, so it doesn't need to cost you anything. Okay, now problems with trading we need to solve. First thing, scammers. Now you might say, well, why do we need to solve that problem? It's not our problem. Well, it is a problem. It's a problem because you go through Instagram and all you see is people with zero bloody credentials, and that annoys me because as somebody who, and I'll pick up the book yet again, somebody who's worked bloody hard in this industry to communicate to private investors for 25 years what trading online involves and made an international bestseller out of it, and several others for the Financial Times. It annoys me when I see the scammers out there destroying my industry. And also, we need to drain that swamp. So I'm going to suggest to you all, you follow me on LinkedIn. Probably the best way to determine if somebody's got any credentials is just see what other people say about them. I don't mean other people as in made up fake characters. I mean people with credentials say about them. Just follow me on LinkedIn, and that's all I'll say about that. Okay, we might well be the only hedge fund, I think we are, who bothered to actually speak to the retail client. And part of that's because I was a retail client, because that's how I started. And also because I don't want all that knowledge to go to waste with me, you know, in the crematorium. I'd rather you knew about it. So follow me on LinkedIn. There's all the links, anything I mentioned today, the links are there, alpeshpatel.com/links. I'll give you the LinkedIn option on there as well. The other problem is subscriptions. People are trying to flog you subscriptions. So we're going to avoid that problem, which is why I said to you, we're going to use a retail platform, which is free for life and doesn't cost any money. Okay. The other problem is brokers. And we'll talk about brokers at the end. I've been an expert witness in court trials against brokers because time and again, the brokers rip you off. Even the UK regulated ones will do tricks to rip you off. And we'll do that in the Q&A dealing with that. And also, there's no fund managers to handhold you. You know, have this kind of call, or even better, one-to-one. So we're going to solve that problem as well. Now, I used to say the reason I do all of this is, well, it's fun. Yeah, freedom, fulfillment. Initially, I actually did it for the money. I did it because I was earning a barrister salary when I was in my mid-20s, and that wasn't a lot. You might think, don't lie to us. It was £6,000 for my first 6 months as a barrister. I thought, stuff this, I'm leaving. I'm going to trade full time because I'd already, through my books, met some of the world's leading traders. But now I want to do it to drain that swamp of scammers out there. These are the important numbers we're going to use, people. These are what we're going to use. Kenneth, thank you. Kenneth said, fantastic that you're giving back to the retail investor. I should tell you, it's purely for selfish reasons. I feel pretty bloody good when I get a dopamine hit with messages such as yours, Kenneth, or somebody posts on my LinkedIn saying, wow, that was amazing. Thanks to you, this happened or that happened or whatever. So, you know, it's not altruistic. I get a dopamine hit just as when you post on social media and you look at the number of likes and follows and you go, oh, wow, I got, you know, that many people follow me or whatever. I'm afraid, I suspect, I don't want to big myself as some kind of Mother Teresa of trading. I'm not. It's just I get a massive dopamine buzz out of it. But also it keeps me in touch with, well, where I started from in all of this. And it's fantastic when you see people go, wow, that changed my life. So here we go. Important numbers. What I'm going to suggest is we're going to scan 12 to 20 instruments. We're going to keep this really practical. You probably only just need one computer screen. You don't need to buy hundreds. I'm going to show you a business plan where you really should I only want you really to do one trade per day. Okay. Now, some of you will want to do hundreds, and I'm going to try and keep you away from over trading. You might eventually want to do that, but on day one, I really want you to start till you get the skills right. Okay. Not over trade, because over trading usually results in people losing money. And the most important thing for me is not that you make money. The most important thing for me is that you don't lose it. And that'll work to about 20 trades per month. And you're going to see in a business plan why this is ample. So what are we going to scan for 15 minutes a day? Well, I've put some instruments here. Okay. If you want to see every day which instruments my team are focused on, then we've got a Telegram channel where we put on which instruments we're looking for the next trade on each morning. Okay, and the Telegram channel's on the links I sent you earlier on the alpeshpatel.com/links. Okay, so like I said, you're going to need to make notes and take photos and stuff. So you're going to scan these. Now, how do you decide what instruments, what time frames, and what the heck are you scanning for? That's the problem we're going to solve in this webinar. We're going to scan those and place one trade a day. Well, why have you picked those numbers, Alpesh? Well, we can argue the toss over it, but over 25 years of teaching people, we've worked out that actually less is more. Instead of telling them to do dozens and dozens of things, less is actually more. So we're going to stick with those numbers. And you can see here, there's so many instruments to choose from. So how are we going to pick? And I'm going to give you some clues on that as well. These are the ones we've happened to pick. But really, trade selection is critical. It's key. So how do we pick what things to select? And normally I want a bunch of instruments which are not largely correlated to each other, so I get lots of choice. So I can go long and I can go short. So I may well have S&P, or my team may well have S&P 500, so an index, the DAX, the German index, Apple, Amazon, just because we've got some long positions on those. So any opportunity to short them, make profit from them falling is good. The FTSE, maybe even Ripple or Brent crude oil or Ethereum, doesn't really matter. It's like a supermarket. We're just buying and selling. I don't care what the underlying product is. And that's the right mindset, because if it's got prices, it can move. If you can buy low, sell high, or sell high, buy low, that's all we're here to do. We're just here to make the money off the back of it if we can. More importantly, protect the risk. The other problem we've got to solve is this. People who think that just because something says academy or school or university and they give you tons and tons of screens that you should be looking at and tons of home study, that is the answer somehow. It's not. We're going to try and simplify the process. It's a bit like learning to drive. When you learn to drive, you don't need to know how the car works or the internal combustion engine works. I think that's what they still use in cars, or electric batteries work. Okay, and I'm going to keep it very practical. Otherwise, I can't compress this into the remaining 45 minutes. The biggest reason when we ask people, why don't you think you can make it in trading? Some said not enough money, and that's fair enough. But at least if you've got not enough money, you can start the education, as I did. I started learning at university. I didn't have enough money. I had no silver spoon in my mouth. The other one's not enough time. So we're going to make sure that the process I give you is one which you can do around a day job. Scan for 15 minutes before work or after work, or do an hour on a Monday. And then that's it, set for the week. And we'll have maximum of 3 trades, open at any time. And you'll see that with the business plan I'm going to give you, that'll be ample. We can talk about getting ingredients and later on. No simple strategy. I'm sorry, I think I'm broke in the way of that. No good simple strategy. So I need to give you a simple strategy. And the strategy I'm going to give you is the one that I got from the leading traders that I interviewed for my book, Mind of a Trader. It should be back there. It's back there on my shelf. And I'm going to give you a free copy of that book to download, okay, as well. So you can read it for free. You don't even have to buy it. And the reason for that is as I said to Kenneth, I love the dopamine hits. Hopefully you'll be delighted and you'll say, wow, Alpesh's webinars are great. He's giving us free things. Target income for most people, when we asked them this, what was reassuring is they weren't stupendously greedy. For the vast majority of people, it was, starts at about an extra 500 a month. So we're going to keep our ambition small. And you might say, hang on, Alpesh, I came on this webinar to get rich quick and make lots of money. I'm sorry, you're on the wrong webinar. There's some trading academies will give you all of that stuff if you want to be, want somebody to blow smoke up your nostrils. The reality is, it is like, as I said, learning to drive, and we want to learn that skill in a demo account, a sort of sandbox, a playground which is safe, and then go out with live cash later when we're consistently profitable. So once we've learned our skills, and even with live cash, we only want to try and aim at making 500 a month, which might be some months you make more because you did well, some months you make less or none, and you average it out. It's not a bank account. It's not guaranteed, and there is certainly no guarantees of making money in the markets. Then once you've learned the skills, your only problem is scaling. In other words, adding more capital. That's why I never worry about the capital part. And you might say, it's all right for you to say, well, because if you can learn the skill, you will find ways of getting the capital. Okay, we need to focus on the skills. Now, I know why some people are here. I don't know SpreadX, and this is certainly not an endorsement for them. This is something I came across when I was writing one of my books about 8 years ago. We were writing a book where we got anonymized data from a couple of brokerages, and we wanted to see if the ones who are making money with those brokerages, were they doing things which the professionals do right? Were they lucky? Were men making more money than women, or vice versa? Were there certain products? Were there certain times of the day? Was there anything we could find from the data which would be interesting to share in the book? And I'll share with you what we found, which actually reinforced what we knew from the professional side. So I'll give you some of that knowledge. But this is one of the images that I found on the internet at the time. And I thought, well, no wonder brokers send stuff like this around. It's going to make everybody go gaga and think, screw the lottery, I'll just gamble on trading. And you can gamble on trading. You can gamble on investing. It's a bit like crossing the road with a blindfold on. If you ignore the information of cars coming at you, you are gambling, even though for 99.99% of people, it's a safe thing to do if they take the information in. So we're going to make sure we don't turn what could be safe into something risky unnecessarily. And yeah, £1 million, of course, that's going to make you go, we're not going for that. We're going for 500 a month. I know. You're disappointed, aren't you? You're thinking, oh, well, I'm going to go to the brokerage webinar because they're going to tell me how to make $1 million. Yes, they are, because they want to rip you off, because they know 70% of their clients lose money. And here's the numbers of how many lose money. You see those down there? I took that from the 3 websites of 3 different brokerages, and 68% of retail accounts lose money, 66%, 61% lose money. Well, how come? Given you've only got 2 things to do. Yeah, Steve said you've jumped back a slide. I can no longer see the MT4. Yeah, I've taken the MT4 off. And Maz has asked, is trading like gambling? It is if you ignore the information. Just like I said, if you cross the road with your eyes closed, even crossing the road's gambling. So we've got to make sure we remove the gambling element of it. And that's my job, to show you that. And how do we remove that? Well, we remove the amount of risk we're taking. And I'll show you a professional way of doing that. Equally, like I said, if you want to go across the road with your eyes closed, that's gambling as well. And we're going to avoid doing stupid things. And the vast majority of people gamble when they're in the markets because they don't know what they're doing. If you don't know what you're doing, it's gambling in anything. I mean, I could be riding a bike and gambling if I don't know what I'm doing. So we're going to make sure you know what you're doing. And that's the point of this webinar. Remove the gambling part out. So you've only got 2 decisions to make, when to buy and when to sell. If you've only got 2 decisions to make, when to buy and when to sell, how come more than 50% of the people get it wrong? Okay, so you've got 2 decisions to make. Now, at that point, look, you see it come off a bit. You might decide, well, thanks, Alpesh, I'll take the money, I'll run. By the way, the yellow line I'll explain later. That's our own, for our own internals. It tells us where we should put a stop loss, and the dotted line tells us when we should add to the winning position because we've got some profits, because the price has moved up, got some profits, add to it. Now, most likely the team will probably take the profits on this because they can see it moving lower. Yeah, we're not going to wait. Okay. The point is, you've only got 2 decisions to make. Green arrow, when to buy. Red arrow, when to sell. Okay. If that's the case, or your stop loss gets hit and the decision's made for you. So given that that's the case, you've only got 2 decisions. How come 66% lose money? And the 66% who are losing money are obviously gambling. If you're losing money in trading, you must be gambling. Of course, not every trade is going to be profitable. Doesn't mean you're gambling every trade that you've lost. But long term, over 12 months, you might give it 2 lots of 12 months, 3 lots of 12 months. If every year you're losing money, you must have been gambling. And I've had cases where I've been an expert witness where actually one person went bankrupt with one of these accounts, and he was being prosecuted because it's a criminal offense to go bankrupt through gambling. People don't know that. And so I had to determine whether or not he had a discernible strategy, and if he did, that he wasn't gambling and therefore shouldn't go to prison. So there's a warning for you. You won't hear on the other webinars where people are trying to tell you to get rich quick. They won't tell you might go to prison if you mess it up. Yes, some of you might leave now and say, oh my God, this was not the webinar I was expecting. Well, you know what? I'll have done my duty. If you thought you were in a get rich quick thing, trading is not that. So what are we going to try and do? This is it. We're just trying to work out. We're going to simplify it, simplify it, simplify it. It's the only way I know how. It's not for your sake. It's for mine. Okay. When there's a sell, when there's a buy. Now, you and I and the biggest hedge funds and George Soros and whoever pretty much get the same prices. This happens to be sterling US dollar. Could be anything else. It could be Google. I'll show you Google in a second. I'll show you Amazon in a second, Microsoft in a second. Okay. It could be anything that moves. Now, given that we get pretty much the same prices, it's not as if they're going to get massively cheap. Oh, Mr. Soros, come in. We'll give you a 10% discount on the price of Amazon shares. That ain't going to happen. All right. First of all, it'd be illegal. They might be able to do some discount, which would be fair and reasonable for the volume of the transaction, but it's not going to be significantly different. Okay. So given they've got the same data as you and I, and they've got the same 2 decisions to make, how come some are making lots of money and retail investors are not? right? Now, some of that's down to brokers ripping you off, and I said, we'll do that in the Q&A. Trader 1 does the same trades, makes £500. Trader 2 makes 5,000 because they've got more capital. Trader 3 makes 5 million because they've got this more capital. Should be the only difference. How much money the other people in the market have, and that's what we're going to do. We're just going to try and capture trends. Okay, buy low, sell high. That's all we're going to try and do, or sell high and buy cheaper, lower. That's all we're going to try and do. Again, we're keeping it simple. I'm going to do 10 different strategies and all the rest of it. We're going to keep it simple. And we're just following what was taught to me when I first started out in 1997, when I first interviewed the world's leading traders like Bill Lipschutz, global head of foreign exchange at Salomon Brothers, who said to me, look, you're a student. I was a student at the time at university. I interviewed him for the book, for Mind of a Trader, because I had to find a way of meeting the world's leading traders, and that was a good way in. And they said, you better stick to trend following because it's easier when you're young and you don't have much resource to do that than any other kind of trading. Okay, you're not going to do merger arbitrage. You don't have the analysts for it. You're probably not going to do some kind of sophisticated options trading because you won't be able to afford the data prices that you'd need for that and the calculations that are involved. So I said, yeah, okay, fair enough. So that's I'm showing you strategy 1 of 10 that we have in the fund. We're not the only ones who do trend following. We're hundreds of funds do it. And these are all the products. So how do we choose? Well, all of these have trends. If it has prices, it has trends. Okay, so we're going to pick some of those. And how accurate can trend following be? Well, let's just look at roughly the last month. I did this earlier in January for the preceding month, and that was the S&P 500. Okay, so what happened? Well, we didn't have a good start. That was a loss. Okay, that was a small gain, nothing to write home about. Let's ignore it. That was a better gain. Thank you very much. That was small, nothing to write home about. That was a big gain. That turned out nicely. Thank you very much. That turned out nicely. It doesn't mean we got all of them. We might have, I don't know, the person in charge of S&P 500 might have been on holiday and we didn't cover for them. So there you go. And then there was that one. So that was unusual. That was unusual. That was not typical. Typically, we do not get out of, what is that? Out of 10 trades, 9 which were profitable. When you toss a coin sometimes, even if a coin's 50-50, you can get a winning streak. You could get 10 heads in a row. We are not so stupid to think that getting 10 heads in a row means I should be in the business of a professional coin tosser. Similarly, we know that this was an outlier. 9 out of 10, or whatever the number is, 7 winning out of 8 was not typical. Okay, or with oil, we got some which were just phenomenal. They almost make the whole year up for you. There are some, and don't forget, in the strategy which I'm going to show you, we'll be adding to winners. So what you're doing is you're risking some of the profits you gained in order to open a new position. So now you've got 2 positions benefiting from falling, and you can start with a small position because you know you're going to be adding if it's a winner, and if it's not a winner, you're not going to be adding. Okay, so sometimes you get, and that's actually what happens. You can write this down. 80% of your profits will come from 20% of your trades. 80% of your profits will come from 20% of your trades. Now, sometimes I'm asked, can I do this with larger sums? Can I do it with Forex and crypto? Well, you can if you want to do $10 a point. I don't recommend it. If I've got some rich friends who'll do $10, $20, $30 a point, or if you've accumulated a lot of profits over time, fine. The market is deep enough to absorb those kinds of sums. So and this isn't for CFDs or spread betting. You might be using futures, options, whatever. It doesn't matter what you use, and it's broker independent. It doesn't matter which broker you execute as long as they're regulated. So yeah, you can do that. It will take the liquidity. It's one of the advantages. Now, if you do it in small cap stocks, no, don't. It won't take the liquidity, but you can with crypto, yeah, for anything that moves, because the market has sufficient liquidity as long as it's not a tiny little crypto. Okay, so that's fine. And you're going to have a lot of time where the market does nothing. So get one. I can't help that. If the market goes sideways, I can't manufacture gains out of nothing, and you'll get small losses and small wins. A lot of your trades will end up being small losses and small wins. Why? Why, Alpesh? Why aren't you right just 100% of the time? Sorry, I don't have a crystal ball. Nobody in my industry does. You will not be right 100% of the time. Maz, I'll come to when you exit. I'll come to the strategy part in a second. Okay, and yes, if you're doing large sizes, that's the dream, and that's the ultra high net worth person. That's the multimillionaire. All right, just so you know. or at least has a net worth of about $1 million. So in case people say, what size should I start trading? Now, you know, net worth of $1 million, probably $10 a point. If your net worth is less than $1 million, you should not be doing that. And you can pro-rata down. We're going to start with a demo account where it's 0. Some brokers will allow you to do at 7 cents a point, and we'll come to brokers, I said, in the Q&A. Okay? So before you think you're going to make $3,000 in a day, you're going to need to do $10 a point. If you're going to do $10 a point, you'll need a net worth of about $1 million, I would suggest. Bang, there you go. Simple as that. You know, because this is one of the things people ask me, so I created this slide to show them what it would entail. For the vast majority of people, and I think a pound a point's too much. There's some companies out there saying, no, do pound a point. And that's because they've got a kickback from brokers and they know you're going to lose the money, so they get to take it off you. I think that's too much. I think 50 pence, or as I said, starting out, demo account, then 7 pence. And you're going to say, well, you're never going to get rich at that point. I'd rather you didn't lose money than tried in the pursuit of wealth to lose money. Longer term, it can also protect you. This is the S&P 500 daily charts. Now, some people will use trading to hedge against their overall portfolio. I have a lot of US stocks in my SIP and ISA, a lot of US stocks in my SIP and ISA. And if we got an indication that the S&P is going to fall, well, that's sort of a hedge. It's not a scientific hedge on the portfolio. But if we short that and make some money off that, then at least I know that it's paid for the falls in the overall portfolio. So there's another reason for doing this. This is what your performance is going to look like. We're going to come to the business plan and the strategy in a second. The strategy is, how do I know when to buy, when to sell? Okay, so I'm going to come to that. But first, I wanted to show you what the problems are you need to solve. This is what it will look like. Now, if you thought I was going to show you a chart where all you ever did was have big wins, I'm sorry. That does not happen. This is what actually the performance of every single successful professional trader looks like. Right? Whether it is Jim Simons, whether it's Winton Capital, AHL, this is what it looks like. If it doesn't look like this, they can't even raise capital. And the reason it looks like this is because it has to look like this. If it was only big wins, they'd have a monopoly on money. Okay? And if they had big losses, nobody would give them money. So they know they've got to protect. So our strategy has to protect the downside and protect us from big losses. Why are there small wins and small losses? Well, no matter how hard we try, Donald Trump does a tweet or whatever he does nowadays, and the market moves. Or Putin fires a rocket and the market moves after we've opened a position. So you're sometimes going to necessarily get that. Trading is not about being able to see into the future. It is about following a trend, the type we're talking about, and that's what it is. Okay. And similarly with all of this, what are we going to do? Well, I'm going to suggest that you have, as I said, a range of indices, Forex, and with Forex, I suggest, and you might say, I've never done Forex. Doesn't matter. It's just another product. You have minor versus minor currencies, like Australian dollar, New Zealand dollar, because they're easier. They trend more because the big banks don't trade them because they don't have much cause to trade them because there isn't much customer demand for them, rather than sterling US dollar, which is a bit harder. Okay. In fact, Bill Lipschutz, global head of foreign exchange trading, my mentor, and who was in my book, Mind of a Trader, said he never made money trading US dollar, sterling US dollar. And I said, why? And he said, because he just couldn't. And I said, but you're global head of Forex trading at Salomons. Your chairman is Warren Buffett at Salomons. And what the heck? You've never made money. How did you get into your position? He said, I didn't need to. I made it in other things. Right? So again, I'm not worried that I'm not trading what people might think I should. And similarly, major versus minor currencies. So for instance, sterling Canadian dollar, sterling Australian dollar, no issues. Minor versus minor, major versus minor. And then, like I said, the DAX is always good for, it tends to be more trending. And we put a list up on my Telegram channel also of which ones we're looking at every day to help you as well. So this, we're going to come to the strategy, which I think Maz or somebody was asking about. Can you use it for NASDAQ stocks? He asked. Isn't Amazon on? So we're going to look at these stocks. Did you join late? Isn't Amazon on NASDAQ? Well, I don't think it's on. I think Microsoft's on NYSE, but so yeah, you can. You can use it on anything that moves. That's the whole point. So that was Amazon. For ages, I say 23rd to the 24th, didn't do anything, went and then fell off a cliff. So what was it about the market at that point? What was happening here? And I'm not going to point you to some Japanese candlesticks or something else. I'll explain to you what it is that we look at, which suggested that the camel's back's going to break and it could fall. There we go. Apple. And that's what happened with Apple. The rally. This went nowhere. this sort of didn't do much. It did a bit. Let's just go back a bit and see what happens. See, we had a long trade there, and that just carried it on. Thank you very much. So yes, you can do it with you can do it with anything, trend following, anything where the prices move. You can do it with rice prices if you wish, or oil, because everything has a price that moves. That's my point, and that's what gives you more choice. The more choice you have, the more you're not concentrated in just a few separate things. Ah, you joined late as well. Okay, so let's work it out. This is what trading is. So you need a process, and then we're going to go through each of these elements. You need to know where to put the stop loss. That's probably the most important thing. I know I keep focusing on protecting your losses. Stop less. Sorry, apologies for that. I hadn't noticed that I'd written stop less instead of stop loss. Stop loss. You need to know how to get in. Now, most people focus on this. Well, yeah, but if you don't know how to get the hell out, then it's not going to help. Limit order or take profit. Do we ever use that? Well, we're going to use that only if you're a beginner. If you're more advanced, you're not actually going to use a take profit order because you're going to be adding to your winning trade and you're going to let the trailing stop loss take you out at a certain profit. Okay. Trading psychology. Well, we're going to avoid as much of that as possible by simply letting the computer tell us when to get in and out, or suggest to us, not tell us, suggest to us. You can override the computer. The reason we still don't just let the computer place our trades automatically is because, well, I'm not going to sit in a Elon Musk automated driving car. I don't trust computers. I still want to make a judgment. So when I see that, I might override that and say, you know what, I just don't feel long on JP Morgan, so I'm not going to do it. And it might go up and I might think, oh, I should have trusted the computer. What the most important thing the humans in my team have to do, and there's still a role, no matter how much intelligence you have through machines, and I'll give you a long-term FTSE. At the moment, we're short on the long-term on the FTSE. Okay, this is the 4 hour. My favorite time frame, sorry, 15 minute, 31 hour. You can do those with a day job because they still last, the trades still last a few days. Okay, I don't particularly like 4 hour, but I've done it because for those who want to know what the position is at the moment, and it's still a bit weak. I think that'll turn around actually. But anyway, that's where we are with the FTSE. Now, the point of this is we need to know stop, entry, and all the rest of it, right? So let's we let the computer decide for us. Why? Because imagine one day you're long here and you're bullish the FTSE, and you go down and you tell your mates, yeah, I really think the FTSE is going to do well. Look how much it's gone up since December the 20th. Oh, I'm just nailing it. The next day you go to the pump and say, oh no, I'm short now. Well, as a human, you're probably not going to want to do that. But if the computer tells you, and it's a lot easier saying, well, this is what our systems are saying. So it overcomes all those psychological problems people have of when it comes to trading, of trying to overcome the psychology part. When I'm on the BBC and I'm don't on 1 minute you've got to go short. So I tell them, well, the trends to us are this. And they do look at me blankly when I do that, as if I'm absolutely crazy and saying you're putting your life in a computer in charge. Well, we do that every day in our lives, but we need to remove the psychology part. And then I'll tell you how much money we're going to put into trades. And initially it's going to be zero. And where do we add to the winners? So let's get on with that part. By the way, can I right at the end tell you some technology we spun out of the hedge fund right in the last 10 minutes? You don't have to stay for that. If you don't want. But the reason I ask your permission is I like telling people what we're doing on the hedge fund side, what we're spinning out. We're hoping it's going to be $1 billion company. We're going to, I've got an event in Parliament where we've got some venture capitalists coming. So I'm hoping to keep pushing that with, Google Ventures, Amazon Ventures, and hopefully, who knows, IPO it in a decade or whatever, and it'll be worth $1 billion. But I wanted to share that with people because it keeps my colleagues at the fund happy as well, that I'm not just doing these for charity, but I'm actually telling people about our plans. This is a major hedge fund out in Hammersmith in West London. Okay, Winton Capital. This is one of their slides. It's not one of mine. This is what we're going to do as well. This is all we're doing. So we're coming to the strategy part. We'll do the business plan, then we'll do the entry. Okay, this is all it is, right? This is what trading entails. You might say a lag, but I want you to be able to see into the future, Alpesh. Why is there even a lag? I don't understand why you've got a lag there, Alpesh. That just does not make sense. And the reason is that's what a multi-billion-dollar hedge fund says. Okay, we can't see the future. We don't ever get in there, and we don't get in here because it's still bloody falling. Okay, and somebody, anybody who says, oh, I got in right at the top, they're lying to you. There will be a lag. Okay, that's what will happen. Now, For us, despite those lags, are we doing okay? Yeah, we're not greedy. This is Amazon. I've blown up the screen. Remember, even if you're a beginner, for those who are beginners, and I always pretend I'm talking to my wife on these things, you've just got to look at that and click either buy or click sell. Okay, so if we get a red, you're clicking sell. And when you get a green, you're clicking buy. My wife can handle that. The point is, that's what it should typically come out at. That's also turned out to be rather good. There's been a significant number of, there'll be months where you just get reds. You keep tossing tails. That's why you need to trade small amounts of money. If every single week or month was like this is Amazon from November to end of December. So it's about 2 months worth of Amazon. If every single 2 months were like this, then we would trade a lot larger size, obviously. The reason we don't, and I'll go through the business plan numbers in a second for you as private investors, is because we're fearful. What if those greens or whatever color you see on screen, which says profits, what if they were the other way around? What if we threw a load of tails? That then we would go out of business for the sake of 2 months, right? That's the biggest fear. That's why I keep talking about losses. That's why I keep talking about protecting the downside. That is why we do not trade larger size. And if we were only picking big wins, then all I would be doing is saying, oh, it's so easy, we just always get it right. If it was that easy, then that's what would happen. And that's why there has to be risk management, because no matter how good your trend following, you will always have some tails that you throw. Now, where have I got all this information? Where did I learn all of this? I didn't invent this. I didn't invent anything of what I'm saying. I purely learned it from others. Bill Lipschutz on the left was in my book, Mind of a Trader, Lessons in Trading Strategy from the World's Leading Traders. I gave you the link earlier on. You can download a free copy of it, alpeshpatel.com/links. You can also follow me on LinkedIn through that. Warren Buffett was his chairman. So I took it from it. It's important, we've got to establish credentials in this industry now, because there's too many numpties on the internet and YouTube and Instagram who don't have any credentials. So I have to, unfortunately, spend more time establishing credentials than I've ever had to before. So Bill Lipschutz is there. Bernard Opperty, who runs a multi-billion-dollar hedge fund, was one of the people I interviewed. David Kite, who's British. He's in the rich list, if you want to look at the rich list. Floor trader, and then now set up, was one of the initial backers of Marble Bar Asset Management, another major hedge fund out of the UK, amongst others, who taught me and told me what trading is. So I'm just sharing what they taught me. I did not invent or improve upon anything that they've told me, other than to use computers, which they didn't tell me, because computers weren't really used that much back then. Okay, so let's look at one of the most important things they taught me when it comes to Selma. Remember, stop losses. So one of the most important things they taught me, and I want to try and pick a long trade. Let's see if we can pick that one's not long. Oh, it's rallied all the way back, went up, then went down, and it's gone back up again. So still up, but let's see if that's... Try and find one. Let's go back to Amazon. There we go. Amazon's a good one. Let's see if I can zoom in a bit to show you. Okay, so we got a long there. Now, what's that yellow line? Stop loss. Why is it there? And we have for our system, so we don't have to do things manually. We get the computer system to work it out for us. So it removes the workload on us. There's unnecessary things that a trader doesn't need to do. And if I don't need to do them, we get the computers to do it. So we've set this up for the retail clients. So got small numbers there. If your max loss is £100, use 0.74 lots, or £5.95 per point per pip, and that's the stop loss. So how does that stop loss come? And if you want to do this manually, this is the strategy part of the exit, right? So listen to this carefully. The thing that the leading traders in the world taught me that all the hedge funds had in common was they use volatility-based stop losses. I'll write this down, and you'll want to write this down as well on screen. They use volatility-based stop loss. Okay, what does that mean? That means that more volatile the market, that means these bits, see these moving up and down? More volatile that is, the further away the stop loss, because they don't want to be stopped out by noise. But how far do you put it? There's no point putting it so far away that it's pointless having a stop loss, or so close they get stopped out by noise. So they have a volatility-based stop loss. And you might say, Alpesh, hang on. If we have a volatility-based stop loss, then surely if the market's more volatile and the stop loss is further away, we're going to lose more money. No, because the second thing they all did was have volatility-based position sizing. That means the further away the stop loss, the smaller the position size, so they don't lose more money. Hence why we have written here, each time it just works it out for you. It just stops you having to do the manual thing, right? Now, what do you do with that stop loss though? Is it fixed? No. If you are a beginner, if you're an absolute beginner that we're training up in my firm, with beginners, I give them $1,000 of my money because they can't use client monies. Obviously, I'd get sued. They've got to use my money when we're training them up. And why do we take beginners who've never traded? Because they're cheaper. We're not Goldman Sachs. We can't afford expensive staff. We've been doing it for years. Okay, so what we do is we'll say to them, right, you're a beginner. Therefore, keep that fixed and see that distance from there to there. Mirror it, which is this dotted line here. See that dotted line there? And take your profit there. That's if you're a beginner. It keeps it simple. They won't make a lot of money. They'll make some, but not a lot. When they're more advanced, and I'll show you that part now, when they are more advanced, then we'll say to them, turn that stop loss into a trailing stop. Okay, you can tell the broker. It's easy to tell the broker, say, I want to enter now because I've seen the signal. You monitor and scan those instruments for 15 minutes a day. You will see a signal in those 15 minutes. And you tell the broker, here's my stop loss. It's volatility based. And by the way, if you want a number, put it at 2.3 ATR. Google ATR if you want average true range. Or you'll do it by sight or you'll do it by experience. But it has to be volatility based stop loss. Okay, there isn't a magic number. If there was, I'd tell you. Right, it is that. So we would rather use 2.3 or 2.5 ATR. 3's a bit too much, 2's a bit too close. Okay, is there a magic number we could have done by having some supercomputer which tells you, oh, that's the best number there is? Probably not. Okay, and that's mirrored on the other side. If you're intermediate level, that's the stop loss, and it just trails as the price goes up. You'll get out as soon as that's hit. So if it keeps going up and up and up, you might get out at a profit. If you're advanced, you still have a trailing stop, but this is where you add. See where we've put it there for our guys so they don't mess it up. So this is really for our trainees. It's a training tool for our trainees in the fund. We say add. It tells you where to add because it's worked it out for you, and it tells you where that stop loss is for that. So it's all done for them. That's advanced. There's a lot to take in. Stick to simple for now. Fixed stop, fixed take profit. But actually, the money's really made when you're adding to winners. It is essential to add to winners. Now, write this down. If you don't add to winners, you are never, ever going to make money. Okay? Winners add to winners. All right? Losers add to losers. Now, you will have a lot of people out there trying to teach you that, oh, if you're at a loss, just add to that losing position. Oh, don't worry, it'll come back. That is a scammy way of them just looking like they're winning, but they're not. Losers add to losers, and when we have a small loss, we get the hell out of there. Winners add to winners. Okay? I can't tell you something more essential, more sort of, it's published in here, it's published in my 200 FT columns, it's published in Mind of a Trader. It's not, I didn't invent it. I was surprised. I'm not going to argue with you about whether or not that's right or wrong, because I know that's what they use. It's in print. We use it. We're not the only ones to use it. It is essential. So, winners add to winners, losers add to losers, volatility-based stop loss, volatility-based position sizing. So now that's told you out of the Selma side of things, okay, all the parts of trading, I've just told you the stop loss part, when to use the limit order, how we control the mind. We still need to do now money and when to add to additional positions. I showed you that, the dotted line for advanced people. So we need to deal with money, business plan now in the remainder of the webinar. That's the business plan. How much money do you put in? How much can you make? Is any of this even worth your effort? So you need to know that. Is it worth my effort, Alpesh? I know you say 15 minutes, but as a beginner, is it worth my effort? And how do you know when to enter? Okay. All right, so those are the two parts of the webinar. Let's start off with the business plan part first, okay, with this. That's what we're going to start off first. Now, I joke when I say road to rich. The reason I put that is because when I met Bill Lipschutz, so that's my mum, by the way, in the picture. When I met Bill Lipschutz for the first time to interview him for Mind of a Trader, and he was hedge fund manager of the year just a few years ago as well now. So his career has continued very strong. But he was global head of foreign exchange trading at Salomon Brothers at the time. And he said, I know why you're meeting me. You want to know how to get rich. And it's not how I put it. I thought I'd like to know, what are the essential characteristics and traits of a disciplined trader and what should we do to improve, blah, 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 blah. He said, you just want to know how to get rich. I mean, I was a young student. I had no silver spoon in my mouth. And yeah, so I joke and put road to rich. But so the business plan, is it worth it? Well, trading is like driving a car, right? I'm not the first one. I didn't invent that. One of the traders that I interviewed for the book told me that. Because you've got a stop loss, you've got a steering wheel, your entry, you've got a rear view mirror, you're adding to winners. There's a lot of stuff to do when you're driving. There's a lot of stuff to do when you are trading, but you all learned to drive, didn't you? And I say to people, when they ask me, how long will it take for me to be profitable? I say, well, for you to be profitable, how long did it take you to learn to drive? Okay. That's how quickly your body learns new skills. That's how long it should take for you to be profitable. Now, what does profitable mean? Does that mean you'll never have a losing month? No. Does it mean you'll never have a losing year? No. Profitable means you have a strategy you're implementing which, under the right market conditions, would mean that you've got chances of making money, more chance of making money than not. Okay, the problem most private investors have is under any market circumstances, they're really not going to make money long term because it's just not set up right. So what does set up right mean? Well, let's look at the road to returns. So Bill said to me, we're looking at the business plan, and Bill said to me, look, and I was at university at the time, remember? Okay, Bill said to me, Kumar, yes, the answer is yes. Okay. Peter, the answer is yes, but email me. Now, road to returns, maximum, he said, let's assume you've got a business plan. You need to know whether or not you can make money. Maximum loss, 1% of total capital. That's what you'll do. And he said, Alpesh, I know you don't have any capital at the moment because I had next to no capital when I was at university. I don't know how much I had, but it wasn't much to write home about. He said, but assume this is a business plan, what you plan in your future. Now, I think trading is the best side gig, as they call it nowadays, entrepreneurial venture in the world, because you don't need offices, you don't need staff, you don't have overheads. And if you want to stop, you can stop. There's no insurance costs, no warehouses, no supply chain problems, no credit to customers. There's none of the normal problems of business. It's one of the reasons why trading attracted me so much to it. It's one of the reasons why I was passionate enough to write books on the thing. When I was learning how to trade, I thought, well, what's the best way to learn how to trade? I know, while I'm researching it, why didn't I get Financial Times to publish a whole book on it? I had a bit more knowledge than the next person, so they said, yeah, you should do it. That's how much I love it, because I think it is pure entrepreneurialism. So he said to me, if it's a business plan, let's assume you will have in the future, but not today, £20,000. I said, well, how am I going to get that? He said, don't worry about it. If it's not worth it when you've got 20,000, then it's not worth it when you've got 1,000. And I thought, well, that makes sense. I might as well not go on the journey if it's not even worth it when I've got 20,000 in capital. Okay. So he said, therefore, your max loss per trade, remember volatility-based stop loss, where you put the stop loss, your position size will be such that you don't lose more than 1% of your total capital. Actually, it should be less than that, but we've used 1 to keep the numbers simple. For beginners, and certainly for hedge funds, it's less than 1%. If they lose 1% of their capital on trade, that's pretty bad. It should be closer to about 1/3% or 0.5% if you're a good, sensible fund. Okay. Max loss per trade, £200, right? Win-loss ratio. Let's assume you're a bit better than a coin. A coin's 50-50. So let's assume with the strategy we're going to talk about next, the entry part, we're going to talk about next, the final part of the webinar before the Q&A. Let's assume you are going to be a bit better than a coin, right? You're not as good as God. You're not going to be right all the time, or 9 or 8. You might get a winning streak, which I showed you earlier. And I said to you, and I confessed, I said, listen, that's not typical, right? When we got 7 or 8 wins out of, that's not typical. That was just looks like a winning streak to me. So I tell my guys to calm down before they think, hey, Alpesh, let's double the amount we put in next month into every trade. No, because what if that last month doesn't repeat itself? History is no guarantee to the future. We have that as well in my industry, okay? So the average loss will be 200. Now, remember, we're picking a strategy where we add to winners, and this is the bit where it shows you why it's so important to add to winners. If you're adding to winners, the average win should be more than the average loss. For the moment, just bear with me on this and assume these numbers are correct. We're going to really tone them down a lot in a second. So Bill said to me, so you should have an average win of £300. Let's say you do 100 trades like this. I said, okay, let's assume I do 100 trades. That should be 60 times £300, profits of £18,000. At that point, I said to him, Bill, call my parents, tell them I want to drop out of university. I don't want to be a barrister. Forget that. I want to sit at home all day, banging my keyboard, making money like magic. I told him, you know, I didn't have wireless keyboard there. I said, if I can make money like that just by tapping this keyboard, I've got it made in life. Anybody would think that. Of course they bloody well would. That was one of the things that got me addicted when he did that. And he said, calm down. He didn't quite slap me, but proverbially slap me. He said, you still got 40 trades, which are losing money. That's £8,000 in losses. I said, yeah, but Bill, look at that. That's net profit of £10,000 per 100 trades. As a student, I was going nuts, because it was more money than I'd ever seen. And also, I've got global head of foreign exchange trading teaching me. I mean, wouldn't you go nuts? You go, I've got that guy telling me, I got this as a business plan. How can I possibly fail? Well, hang on, hold your horses. I said, I'll be a day trader. They were the things back in the day. And remember, we're going back to 1997. I said, I'll do 100 trades in a week, 50 weeks in a year, because obviously the other 2 weeks I'll be on my yacht or something, won't I, at these numbers? That's 5,000 trades per annum, Bill. I'll be making $500,000 a year. Woo! I was going, I still remember the emotion. And he's just looking at me like I'm insane. And he said, calm down. And what you should all be saying the same, which is, Alpesh, don't be stupid. We're not going to do 90% of that. We're not going to do 3/4. And you're absolutely right. We're not going to do 2/3 or a half. No, we're not. We're not going to do a third of that. We're not going to do a quarter of that. We're not going to do a fifth of that. We're not even going to do 15% of that. Assume for a moment we did 10% of our business plan. We're not going to do that either. But assume we did 10% of our business plan. That'd be 50K in a year. Nope, we're not going to do that. Remember our goal? And you might say, why are you always holding us back, Alpesh? 500 per month, okay? Not guaranteed. Some months more, some months less, some months not negative. And we've got to make up for the months where we might make 1,000 in a month. But that's how much. Why? Well, there's a reason. He said to me, you're not going to do that. You're not going to find 100 great trades in a week for a start, unless you're able to scan every single instrument right across the board and trade like a nutter and have a bunch of staff monitoring them and all the rest. You're just not going to do it, and let alone have enough capital put across to them, right? So he said, keep your day job. And I know why he said it. He said, look, continue training as a lawyer, plan B, all the rest of it. Do 100 trades every 6 months. Do you know what that is? It's 1 a day, okay? Or 5 a week, which is what I said to you earlier in the business plan. We'll do 5 a week or 1 a day, right? Which is 200 per annum, 200 working days in a year, which works out at £20,000 per annum. So it's not 10%, it's about 4% of our business plan. Still too much. That's still far more than the 500 per month. So we're not going to do 4% of our business plan. We're probably going to be a lot closer to, well, 500 per month, probably close to about 1.8% of our business plan. That's when I knew, okay, I don't have the 20K, but this is worth doing, because if I can gradually build up to a proper amount, then even if I'm wrong on my business plan by a substantial amount, I'm still making enough to hit the goal that I want to hit. That's when I knew, okay, this is worth doing. That's how I did the calculation. But equally, I asked him, hang on, if these numbers are correct, then how come everybody isn't rich? And that's what you should be asking me, because it's what I asked him. And he said, there are 3 main reasons for failure: bad teachers, bad mentors, and bad strategies. So let's, in the closing part of the webinar, before the Q&A, look at the last part, the entry strategy. We looked at the exit. Let's look at the entry on the trend following. How do we know when to buy? How do we know when to sell? How do we know there is a trend starting? And remember, that's my mum again. Remember, no, that's not the number. That was a trick. That's not the number. 500 per month. So it's not 20,000 per annum. It's £500 per month is the goal. Why so small? There's a psychological reason for it as well. When people are trading to try and get more money per month without having had experience of doing that, they are usually trading a larger amount, and that larger amount messes them up mentally, in the sense that they won't actually follow the strategy. They won't add to winners, because they'll think, oh my God, those too large a size. I've made this much money so quickly. I'm going to take it. So they'll end up sabotaging themselves until they're used to making a small amount, then a slightly bigger. So increase it maybe in increments of 10%, you know, until, and that's why there really are things called trading psychologists. Their job is to help you break through to the next level, because these numbers are scary. It's a bit like walking a tightrope, 1 foot off the ground, and then you're on a skyscraper. Well, guess what? You've got to go slowly to get used to it and climatize to it. And it's the same with this. And that's another psychological reason to do it. So that's me with all my talks and things that I've done over the years teaching people. And I certainly don't want that legacy to just go and stop as I sit on a beach somewhere. instead. This is what momentum trading is. You're that guy. You're riding the coattails of maybe a major bank which has started the trend. You're not trying to stand in front of it and work out and gamble which way the market is going. You're not doing that. You are not trying to outsmart a Goldman Sachs or a Morgan Stanley or a Bank of America. What you're trying to do is say the trend has begun. I think there's an increased probability if I ride that trend, I will make money. That is what you're doing. Jagger said, can I subscribe to your Telegram channel's free. You can just follow where we're looking for the next trend on that. So yeah, you can just see what we're looking for next, where we're looking for the next strategy on that. Okay. So I said to Bill, well, how am I going to measure that? How can I do it? And he said, well, you're going to have to do something simple because you're a poor student. I was a poor student. I didn't have the money to pay for any subscriptions or anything. And this is why I keep to that original plan, that there isn't any subscription when you're looking at all this data is all live, real time and free. So I'm going to show you how to do it manually. Okay. Before we automated it all. And if you want us to automate it, that's separate that we've created, but I'm going to show you how to do it manually. Okay. It's the first and oldest strategy. He said, look at how close the price closes to the high. And I said, why? He says, that shows you there's some degree of upward momentum. It's a bit like when you see those auctions. I've got 80, anybody give me 90, I've got 90, anybody give me 100, I've got 100, anybody give me 110. Okay. I said, well, how am I going to do that? I can't sit there all day with a magnifying glass. He goes, no, we're going to automate it to some extent. And thankfully you can now with software and all the rest of it. And I said, well, how are we going to do it? And he said, well, the way you're going to do it is this. You're going to see that if the price is closing near the high, there's an increased probability, not a certainty, it's going to move up. If it's making higher highs, there's a probability it's going to move up. If it's making higher lows, there is. So he said there's multiple indicators you can measure, multiple filters. And he said the principle behind all hedge funds is that they always use, they have a theory, and here we're going to use the theory of whatever their theory is. It'll be different to mine, it'll be different to yours. Here they've got the theory of price closes near the high, makes high lows, makes high highs. Okay, so they're going to use multiple indicators, not any one, because that allows them to filter. There's a brilliant video on investing by Warren Buffett out there where he talks about we just have a simple process of filtering. Filtering is the answer to most things because it removes the rubbish trades. It might remove some good ones as well, but that doesn't matter as long as you remove the rubbish ones, as many of those as you can. Okay, so we have multiple indicators as all hedge funds do, but not the way the textbooks teach you, because if that was the case, then everybody could do it. Okay. Secondly, you look for that not just in the time frame you're trading. So if you're looking at my favorite time frames are 15 minute, 30, and 1 hour. Okay, but the next time frame along as well to see in that next time frame, are you also seeing the similar thing? In other words, is the trend upwards on the 15 minute and also looking the same on the 30? And I'll show you how we do that in a second. And finally, you have something called PC and PR, and I'll come to what those things mean in a second. So I said to him, how the hell am I going to do this? I'm a poor student. You know, you're global head of Forex at Salomons. How am I, as a poor student, ever going to do what you're doing, which is far more sophisticated? And he said, well, start off with the tools which are out there, but don't use them in the way the textbooks do, and filter. So use those momentum indicators which are out there, but don't just use one, use multiple indicators across multiple time frames. I said, well, what does that mean? And he said, don't use them the way the textbooks do. So if you're going to use the MACD, use it to see if it's flat. There, you see it's just turned flat and it's just starting to rise. So flat to rising, staying with the stochastic, if it's flat and rising, so not the way the textbooks ever teach you, because this is a lagging indicator anyway, but across multiple time frames. So multiple indicators, multiple time frames, multiple indicators, multiple time frames. That won't be enough. That is nowhere near enough. The third thing you need to do, not just multiple indicators, multiple time frames, flat to rising, is price confirmation. Has the price made a 2-period high? If you're looking at 15-minute bars, 2-period high on that. 30-minute bars, 2-period high. Why is that important? Well, because if you saw something with the momentum indicators, but Goldman Sachs or whoever, Winton Capital, Man AHL, didn't push, Aspect Capital, Brevin Howard didn't push, because they're all trend-following hedge funds, didn't push the price higher, then nothing's going to happen, and you've got a lower probability of being successful. So the price confirmation was just to improve the probability of being successful. Now, since then, we use Microsoft Azure. This doesn't concern you. It doesn't really matter. It doesn't avoid you doing what I've said. We use it to get some pattern recognition. We have a library of patterns it's collected to see if there's any patterns which are sort of approximately repeating each other over the preceding 20 periods. And, you know, it can sort of match those patterns and say, oh, it's something we're playing around with. We'll see if it improves things. It's not something that's that important. But what's more important is multiple indicators, flat to rising, multiple timeframes, okay? Price confirmation. That's what's important. That's the entry. Now, the exit, there's two ways. As I said, there is the trailing stop is one exit, or we actually, on ours, show when those patterns, and trailing stop is the easiest thing for you to do manually. When those patterns no longer are flat to rising, so they're no longer rising, but they're now flat to falling, we'll get an X to exit. Or you use the trailing stop, which is a bit easier. So you tell the broker, oh, I've got a signal, I'll buy at this, please put a trailing stop at this, job done. And you can equally tell them, I'd like to buy more, another position, if the price gets to this, because you can do those orders with the broker, and that's it. And then you go to work and you ignore it. The reason we don't want you monitoring it on your cell phone all day long is because what we found is when people do that, they get something like this and they monitor it, and then they see, oh, it's making nice money. And then it's dropped for a couple of periods and they go, oh, I think I'll exit. They overdo it. Instead of just letting the computer, they let their thoughts get in the way, and their thoughts invariably mess things up. Their mind invariably messes things up, and it really does annoy us when that happens, okay? When they do that, I'm going to show you, I want to show you another one where we got, oh, God. Yeah. Anyway, I'll come to that one in a second. Can't find it at the moment. I wanted to show you Brent crude, but I can't seem to find it. Trying to do this all at the same time. No, that's not it. Okay, we'll come to Brent crude in a second. But I did want to show you all prices, how they'd worked, and then they'd got volatile. When they're volatile, we want to stay away from it. Now, you can do that manually. You can put those indicators on MT4. It's pretty simple. MACD, stochastic RSI, flat to rising. Equally, for our trainees, we do it. When I was giving talks at Bloomberg, what we found is by simplifying it this much, we had full-time mums, we had full-time plumbers, we had professional traders. We know because we asked them, what do you do? Retirees, side gig entrepreneurs, business owners. We wanted to have something which could be applicable to everybody. You don't make an international bestseller if nobody's going to bloody read it. So it was the same kind of mindset I had for the book, which is it's got to be some approach that you're teaching them, which is applicable to, you know, regular people who don't have a financial background. So I perfected this, as I said, when I was at university, perfected a strategy, read Carnation, lost exam. Sorry, I look a bit of a div. Won awards, including in the FT, who then asked me, would you like to write books on this? And I said, hell yeah, because it'll raise my profile, which I can then use to launch my fund. I had a lot more hair then. That's me winning it. Okay. And then I set up the fund. The fund was expensive. That's the first set of offices. Companies like Merrill Lynch, HSBC, which was an online trading alliance between the two companies, they paid them, American Express, a few others, they paid about $1 million to license my know-how. There it is. There's an image of that. And that's how much it cost to set up the fund. So all the money went into, pretty much all the money went into setting up the fund. I continued writing for the FT until I launched the fund, because then there was a conflict, obviously, on that. This is, if you want to download the automated version, which is what we've launched out of the hedge fund, that's what I'll tell you in a moment. But first, I want to finish the webinar, so I can see the chat. Some of you want to ask about, okay, how do we do the same signals you have? Or you can do it manually. But if you want what we spun out of the fund, because we think we can drain the swamp and clean up the global multi-trillion-dollar online trading market of private investors who are losing money by giving them these kinds of tools, which we think is worth, I think that's $1 billion business right there in a multi-trillion-dollar industry globally. So what we found, we looked at it in more detail, and we said to my team, I said, right, look, do different timeframes, do different products. And we found that the 1 hour time frame was probably the most lucrative. Now, it might vary by instrument and time frame, but as a rough and ready measure. Why? Well, the net pips captured in any given month, that's winning minus losing pips, was 2,250. Now, some months it might be a lot more. Some months it might be a lot less. Okay, but you're averaging it out. So the variance is wide, but it was about 2,250. Best win-loss streak, 70 wins out of 100. Worst, 30 out of 100. That's not what's important. What's important is this number. Okay, now let's assume you did a whopping $2 a point. You shouldn't do that. You shouldn't even do £1 a point. And those people trying to get you to do £1 a point, ask them, are you getting a kickback from a broker? And I guarantee you the answer will be yes. So we tried this with $2 a point and said, what would happen if you did $2 a point? And we worked out that what would happen is you would do 2 times 2,250 net pips. That means you would make $4,500 a month. Well, hang on. We said 500 a month is the goal, 500 a month. Okay, so 10% of that, which meant people could start with 20 cents, which meant they wouldn't lose 50 100 on a trade. They would just lose $10 or pounds on a trade. That's a lot more manageable. That's a lot more mass retail. That's when we knew we've got something for the mass market. Barclays Bank then approached me and said, why don't you spin out the training you're doing? We'll float the company. We'll raise you the capital, corporate finance. There's a chap called Biko Alawali at Barclays Bank, who's now a very good dear friend of mine. And I said, well, I haven't got the time to do all of that. I haven't got time to do all of this and give one-to-one attention and make it convenient. At least we could, if we did something, I said, I'd want to make sure there's no travel or hotel costs and there's always ongoing support and there's no subscriptions. Remember, I said, I hate subscriptions. I don't want to be charging people subscriptions. And I certainly want to drain the swamp of the kind of companies who are just doing all of this and then just ripping you off with their brokers and making you travel around the country and chasing them up. So he came up with the name. The guy from Barclays Bank came up with the name. He said, call it pipspredator. He actually wanted me to train him. And I said, I don't have time to do that. And he said, listen, there's hedge funds. We gave the example of Jeff Bezos, who was a hedge fund manager. He said, they've set up tech companies which have become huge. Why wouldn't you spin out the technology? And I said, well, he then likened it. He knew how to work me. He likened it to the iPhone. He goes, it's your baby. You're launching your technology. And I loved it. I loved the idea. You know, global appeal, no subscriptions, and revolutionize. Revolutionize sounds a bit much, but you know, change the way the private traders are trading. There's certainly enough of them. If you get a few of them, that's still $1 billion company. And it's very simple. Buy when the price goes above the horizontal line. You got the arrow there because the odds of a profitable move have increased. And we called it pipspredator, and that's what we did. You can do it all manually if you wish. Okay, and I've shown you the manual rules, multiple indicators. MACD stochastic, flat to rising, not the way the textbooks teach you. Multiple time frames, price confirmation. That's important. For how many instruments you should look at, 15 to 20, scan them 15 minutes a day. Can it make money? Well, I'll show you some more in a second. We've shown some of the breakdown of that. Is it easy? Yes, because we needed to remove that for my trainees. We couldn't have them doing all this maths on, oh, what position size should I do, when they don't need to. The machine can tell you how much it should be based on the risk appetite. Can I do any time with a day job? Yes, because my day job is not sitting in front of a computer screen. It's raising capital. Does it make life easier? Yep. Are there checklists? We'll give you the same checklist I give my staff. This is full disclosure. It's not one of my trades. It's one of my early apprentices. I call them apprentices because, again, another billionaire, Lord Sugar, runs a program called The Apprentice. And if he's got apprentices, why can't I have apprentices? So we did this. And one of the apprentices, now they did 5-minute bars. I don't like 5-minute bars, but they did 5-minute bars. Okay, and you can see that's what they did. Now, why did they do such large amounts? $30, were they rich? No, because over a program of several months, they had built their trading base based on the profits they'd made. They weren't allowed to use their original risk capital. They could only use the profits they'd made. Why? Well, because if anything went wrong or didn't work out, at least they were only using the profits they made. That's why they were allowed to go up to that size. And that's good, sensible practice. Your trade size should only increase thanks to the profits you've already accumulated, not because of additional capital you've added. That's an important rule that you should adopt for risk management. Euro dollar, 15-minute bars, again, quite large. Bigger sums. So somebody asked me once, they said, oh, how much can you make? I said, well, it depends on your starting capital and how frequent trades you take. Initially, nothing, because you're going to start with a demo account, I'm afraid. You're going to learn it. So what have we done in a way? Well, we've taken this. Gets to the heart of the matter of trading by clearly elucidating the methodologies of successful trading strategies. We took what was taught to us from the world's leading traders. That's what the chairman of Chicago Board of Trade said of the strategies in there, and we've computerized them. We've computerized what was said there. And somebody said to me, yeah, but that's an industry credential. What about regular people? I'm like, okay, we've got a whole website of regular people, but mainly the problem people have with regular people is, how do you know they're made up? So what we did is we interviewed them. on video, on camera, okay, under alpeshpatel.com / Alpesh Patel Reviews, alpeshpatelreviews.com. We interviewed a whole load of them because we thought, we got all the ones with the credentials and people still weren't happy. So we thought, okay, let's interview them on video, on camera. There's a whole bunch there, and there's a load more, and they'll come up, and load even more, and they'll come up. Okay, so we did a load there, and you can read it, case studies and all the rest of it. So we had obviously CMC and City Index and Shares Magazine and IG and all the rest of it talking about my work. But then we thought, oh, and Twitter and all the rest of it. And we thought, you know what we'll do? We'll also show them what the actual users of, you know, what their experiences are. Without an indicator, that's what it's like. With an indicator, it's like this. We're launching this. We have launched this. My ambition is to get to 1,000 users. Okay, I take them in batches of 25 because I'm the one who will be directly mentoring them. Why am I taking the time out to mentor them? Because if I get 1,000 who are mentored and profitable, then I've got a bigger valuation for the venture capitalist. When I've got a bigger valuation of 30 to 50 million for the venture capitalist, we take some of their investments to go global, have other people mentoring and all the rest of it. But for the first 1,000 charter members, as it were, I will always be the person teaching them. I will always be the individual. Once it goes past 1,000, there'll be others teaching them. There might even be a subscription for those people, not for you guys, not for the first 1,000. We're at about 850-ish at the moment in batches of 25 that we've got on the program. About 10% will drop out and say, look, trading's not for me. About 10%. Okay, we'll drop out and say trading's not for me. The rest will carry on. Some will be, about 10% will be immediately profitable, like this afternoon, because they've traded a bit, they get it. Some are just natural, but that's about 10%. The vast majority will take about, I'd say, a month to 12 weeks. And then you'll have another 10% who will come back to it a year later or whatever. They got busy with life and all the other things. And that's pretty roughly how it's broken down statistically. Because I want to get to that 1,000 number, I will give you free to keep, just for trying this, signed copies of my 2 most recent books, USB, trading journal, and a bunch of other little goodies in 2 packages you get just for trying this, because I want to get to 1,000 people, and we're at about 815 batches of 25. You've also got a no quibble money back guarantee. There is no subscriptions. There is lifetime updates and upgrades. There is 2 programs, a 12-week course, which is yours for life and updated daily. There is a 30-day course, which will sort of get you ready to be a hedge fund manager level if you want to be, and I'll show you those in a second. But more importantly, there's one-to-ones with me as well. We've got a Telegram, a private Telegram and a public Telegram. The private one's for the Pips guys, and there's a public one as well, and a WhatsApp for all the students, and one-to-one. And now we've got an upgraded community site on Facebook as well for everybody who wants to go on as well, okay, and ask questions and anything like that. That's Bhikkhu. He's the one whose idea it was. He's now left Barclays, actually, but we're still in touch, and he still communicates with them. It was his idea. The name, everything. I wasn't convinced until he said, do you know this is a fintech spin out from a hedge fund? Nobody ever has done this. Do it. 25 licenses per event because I'm the one doing it. You're in it for life. There is no subscription. Okay, there is no subscription. All of the data live, real time, free for life, and all the upgrades. We're on version 4 of the indicator. Okay, we call it pipspredator. We're on version 4 of the indicator, and there is no, well, you can start now. There we are. And we can start trading this afternoon. But that's why I do it. That's the long-term plan with it. But also, you don't need to. You can do it manually if you wish. That's where you go. It is very much first come, first serve. We almost always run out of licenses. Okay, it is first come, first serve. And there is 2 installments as well if you wish, if you go to that site. I'm also going to talk about brokers. I'm going to show you a bit more in just a second. What we found over that period of time is, well, if you look at alpeshpatelreviews.com, you'll see we've had obviously some extreme success, which is not typical, one individual making millions. But for the vast majority, that's not what's going to happen. The vast majority, it's going to be, they're going to start with small sums of money and they're going to say, oh, I did well on sterling US dollar last December. At least I knew what to do. I was ready for the opportunity, and so on and so forth. They're going to dip in and out. Life's going to make them busy. I'll tell you the honest truth. Life's going to make you busy. You're going to be doing other stuff. Then you're going to come back to it. You're going to dip into it, and so on. When you sign up, I'll show you the page you go to. When you sign up on there, alpeshpatel.com/here, you'll instantly download the indicator. We've got somebody who can do it for you if it takes you more than 10 minutes. There's 24/7 human helpline, step-by-step instructions. There is a trading manual. Okay, it's the same training people get in my hedge fund as well. Videos on running profits. There's all these videos. There's Saturday webinars on at 11 a.m. on stop losses, 12 o'clock on entries. So there's lots of ways of communicating with me. 1 o'clock on limit orders, 2 o'clock on money management, 3 o'clock on trading psychology, 4 o'clock on adding to winners. There's the signed copies of the books to keep, even if after 30 days you think, you know what, this is not for me, Alpesh. And any customized videos you need, lifetime mentoring. We also show you each week some of the trades that have not worked out and have worked out, and the lessons, and how to look at trend, how to spot the trends, because it's really about trade selection. Now all the nonsense is sort of taken out. Google, yes, I will show you. You mean Alphabet? I will, and you're right, I did have it and I haven't shown it yet. Where's it gone? There it is. That's Alphabet, isn't it? Yeah, there we go. So I'm long on Alphabet on the long term, but yes, we had on pips, we had this. And now, did I know it was going to fall? I didn't know, but you know, it's accurate enough. And then, yeah, that was a windfall. That was bigger than I would have thought. Currently long, but it's not really going anywhere. So we'll see what will happen. And then that one wasn't much, and I'll check in a second where that was. So that's the aim of it, to simplify. We think we've got $1 billion fintech company here. I think London is the financial center of the world anyway, so I think it's a fantastic place to launch the company from, and that's my global ambitions. I do have the aim also, subject to what the lawyers say, of having all my first 1,000 having free shares in the company for being in the first charter members. And the reason for that is you get no better promoters than people who actually own shares. That's subject to the lawyers. I don't see a problem with it, but that's the ambition. Get the VC money first, and then all the rest of it. I want to be one of these two lists. Why? Well, it's something to do in a lifetime, isn't it? Either that one or the other one. That's the goal with it. The credentials, there you go. People like that, chairman of the Chicago Board of Trade. I want you to be the apprentice for me. That's what it is. It's as simple as that. Be the apprentice. Be the apprentice. For me, that's where you go. I'm going to show you also. As you come up, let me know. Give me a shout out, because I will. We've got some coming through. I will let you know. Yeah, Dylan, happy to hold the place over the weekend. Don't worry. Not an issue. Not an issue. On that, IMT, let me know any questions you've got. Yes, Kumar, the answer is yes, indeed. Welcome everyone who's signed up. I'm excited as well, because you're going to get an onboarding email from me in a second. I do a little video for each individual person, naming them so they know it is me who is doing the mentoring, because it is my puppy. It is Steve Jobs who would go on stage when he launched the iPhone. That's the rough statistics that we've discovered for what happens. So you get in the first week, you'll get some dropouts, and then overall, that is, so some take about 12 months, and you've got 10% who might just get busy with life and whatever and still haven't after 12 months got there. You'll get some who are just instantly profitable by the end of the first week. Okay, and obviously, like most things in life, that's what happens. You get some who are very quick on the uptake, some aren't, but at least you've got 30 days, not 7, not 14, not 21, 30. We're broker independent. You can go with any broker. There's no ongoing charges at all. In fact, let me just reiterate that point. We've got a dedicated website, pipspredator.com. You can access the 12-week course from there and the 30-day one. You don't have to do it, but we recommend you do. You can just read the manual and download the indicator if you wish, and set up the calls with me. Okay, and that's the point of it, that there is no ongoing subscription. It's just a one-off, and all lifetime upgrades are included forever. All right, and because we wanted to make it absolutely extraordinary and special, such that nobody else could compete with us, and that's why we do it. The reason we don't charge subscriptions and we're broker independent is, unlike the other people out there, and if we're going to drain the swamp, let's talk about it. Unlike the other people out there, we're not making money from you losing money and us getting kickbacks from the brokers, and we're not making money by dragging you out. See, this way, we have to get you to profitability as soon as possible. Otherwise, you're going to be bugging me and saying, Alpesh, oh, still not what about this? What about this? What about that? So this way, it's an insurance policy for you and me to say, we want to get you to profitability as soon as possible. Otherwise, we'd just say, now let's charge you a subscription and long it out. Okay, it's as simple as that. And we can absorb the long-term costs of providing the indicator, the upgrades, the community service, the all the updates that go on the channels, because, well, we can afford it. So that's why. We've got people from all of those countries from around the world, most from the UK, obviously, US, EU, Australia, New Zealand, Canada, UAE, Hong Kong, South Africa, and Singapore, probably the most popular ones over there. We did an analysis of how much it's worth, and I'll show you that in a second in terms of all the mentoring and everything else, and given the one-to-one mentoring, and that's why we came to that number. And when you click on, you will go there, and you can do split pay if you wish. You still get instant access, you still get WhatsApp, you still get Telegram, you get all of that, and you still get 30 days, and you get to keep the books. Yes, you get to keep, Dylan, you get to keep the books no matter what. You get to keep all the goodies no matter what. Which brokers do what with the indicator? Every single broker on the planet which allows you to buy and sell stocks works. The point is, you would, let's say you've got this, okay, which is the MT4 platform, and let's say you've got Amazon, all right, and you got this buy. You can place that with whoever you want. You can place that with IG. You can place that with whoever you want. So you would take the signal from here and place with any broker on the planet. Interactive Trader, if you wish. You could use eToro, if you wish. You could use CMC, Saxo Bank, IG, City Index, whoever you want. Now, we also share with you some of the spreads that some of the brokers have, but that's got nothing to do with the indicator. It's just that if some of them got wide spreads, we'd rather you didn't use widespread ones. We used to say ETX, but they've been taken over by Oval. So then you've got Vantage. There's a whole bunch. Intertrader do straight through processing, so their spreads are a bit narrow, but they charge commissions. Others are commission free, but their spreads are wider. So we can navigate through that, but we'll make sure whichever broker you choose and you use, they're FCA regulated, and we'll check their spreads as well. Okay, on that. So yeah, you can use anything. Can you use the software for trading options? Exactly right. Because let's say you got, I don't know, think of a position. Let's say you got this. Okay, so let's take the FTSE, right? You got that, or you got this. So you could get a put option there. Just get a put option. I would suggest, by the way, the most cost-effective options, in my view, tend to be for this kind of trading, tend to be not near month. I'd probably say at least 2 to 3 months out, tend to be just in the money rather than out of the money, just in the money. And that will give you a delta of about 0.6 for those of you who understand deltas and stuff. And you might say, well, no, I want different ones, but I think it'll avoid some of the sharp time decay because they're more than 2 months out, and it'll avoid some of the risk you'd have of the volatility not, the market not moving. So that's what I'd suggest. But we can handhold you through the options, or I can, because that's what I used to do before CFDs came out. As well. Do I necessarily use spread betting? No, you can use options, CFDs, cash markets. I mean, I'll give you an example. With the FTSE, you might decide, oh, actually, I'll buy the index tracker at that point, but you'll not want the short-term ones. You'll want the longer term. So you certainly don't have to do spread betting. Did you know hedge funds use CFDs? Most people don't realize that. We use CFDs. Contracts are different. They're a futures contract, essentially. And it's what we use. So you can use CFDs, you can use futures contracts, you can use options, you can use the cash market, underlying cash market. It's up to you what you do with the signal. It's completely up to you. Okay. I've also started doing monthly events in the city. So we've just finished our second one. So you'll be invited to those as well. Monthly events in the city on the Strand. My February one, I haven't got the date yet, but I'll fix the February one, and then you can come to that one as well. Okay. And then you've got all of this, and it sort of explains it all. If you go to alpeshpatel.com/here, forgive. This is Biku's idea. He said, listen, if you want people to take action, you do a big letters, big in your face stuff. He said, you write, hurry, you write, you do a big yellow bar and an arrow pointing at it. You tell them what you want to do. They're pretty aggressive at Barclays. And he said, that's what you do. And so it's there, and Visa, PayPal, all the rest of it. And like I said, you click on that and you'll go to, you can do split pay or whatever. Our ambition with this is eventually this is going to be not for the first 1,000. They will always have the fixed price, one-off payment. But in future, what indication we've got from the venture capitalists is we will have to go to a subscription model for others, not for you guys. So mentoring will become probably 2,000 a year, and the software will become 2,000 a year. The venture capitalists have said, if you want to try and get us interested and get us to invest, we'll want the subscription model. I don't like the subscription model, but at least for the first 1,000, I don't need to do that because we can prove the model, we can prove it works. And you can see on alpeshpatelreviews.com the reviews and the video interviews. I don't like those. This is Jeremy from Croydon. Oh no, that's amazing. Because nobody can ever verify. So we actually do the video interviews with them. So you can actually get to see it as well. And that's why we give 30 days and not 7 and all the rest of it. There is no contract. There are updates. You don't ever have to pay for update. Oh, we've got a few more coming through. Damien, yes. Sonal, yours has gone through as well. Thank you. I'm excited as well. Do we now, can the software provide stocks on the watch list, or do we need to find our own stocks to trade? No, the watch list includes, let's have a look at the watch list. So the watch list includes Amazon and US stocks, European stocks, and US stocks. Okay, so it's got everything. It might not have the tiniest little AIM stocks. It's got Zoom, Uber, Beyond Meat, Wells Fargo, Citi, Disney, eBay, Chevron, Boeing. I mean, it's got a hell of a lot of stocks on there as well, but it won't necessarily have every single tiny one because it's always scanning all of that. So there's only a limited amount of data it can sort of scan through and find. So it's got all the majors, so that won't be a problem there. If I was to trade a retail trader, what time of the day would you trade in the UK? What are the optimum hours for FX? Brilliant question, Michael. I used to put this on before for the best hours for the US and for Forex and for the UK market. We used to say for the US, trade basically after the UK market is closed. It'll be a bit quieter and America's still open, as opposed to when US and UK are both open, okay? Because then you've got them both fighting. There's a lot of volatility, a lot of misdirection, trends aren't following. Really now what we found is it's not making much of a difference what time it is. I mean, we've got some people, because the Forex markets are open 24 hours a day. We've got some people who are trading at 3 in the morning UK time because they're based in Australia or they're based in Canada or whatever else. So it's really not made a difference in terms of timing. We're not trying to do some kind of market opening or market close. So what I normally say is actually it won't make much of a difference on what we can see, and you'd always be able to see. By the way, we always leave all the historical signals on each of the charts, so you'll just be able to see what's been happening in the past anyway for an instrument at any given point. What's my long-term plan? I think I've explained that. How do I, if I need to install, you can speak to someone. Where do I get the time to mentor? Well, this is what we discovered, and this is the reason why nobody else offers the principle, the individual behind it, to do the mentoring. They might get some Mr. Head of Trading or somebody that they've hired, pay them 30 grand a year to be mentoring you, but they don't have the person behind it because their system doesn't work. I can only offer the time that I'm going to give because I know you're not going to bother me if you're making money. It's as simple as that. And we stumbled across that because we thought, hang on, we can say to them, hey, you get unlimited mentoring with me and I've got the time to do it, because they're going to be profitable, because that's what happened in my firm. So that's why we do it. Nobody else will do that. They'll say, oh, we've got classrooms. Oh, yeah, you can speak to one of our trading assistants. Some guy on minimum wage that they've just trained up. Okay, it's not the principal. It's not the hedge fund manager. And it's I think if I can make $1 billion company, then I should be the one doing it. Why do I limit to 25? Well, because it's me. I want to maintain the quality and all the rest of it, and I want to make sure I'm available. Let's say all 25 of you said, can we speak in the next 12, 24 hours? Then, and I let 100 in at a time. But that's fine, because if 25 get to profit really quickly, and I'm basically, my assistant will look at my emails and say, if I've got more than one email in a day from an apprentice, she won't let me open it up to another 25. It's as simple as that. Okay, so she'll work it out on that basis. It's a rough and ready rule, and it works. And we open it up like that. Can I download it on more than one machine? Yes, we don't mess around. We're not going to say to you, oh no, you can't have it on more than one machine. I mean, we will know if you've got it on 5 different machines at the same time. We had a couple of people try this, funnily enough, from Nigeria, who had it on multiple machines. And basically what they'd done is try to sell it, but it didn't work for them, because then the fourth person got in touch with them and said, when can I do the mentoring? And I said, I don't know who you are, mate. Who did you get this from? And they said, you know, whoever. I said, so it won't work that way if you try and sort of, but yeah, don't worry, IMT. Can sold price stocks? What's your answered that one? I think I've answered them all. Let me know if I've not answered anything. Just repeat it as well. Thank you, Martine. You are in as well. Sandy, yours has come through, as well as has Kiran's. I can see that's come through. Thank you very much. I'm very excited. You'll get an email in about the next, give me about 20 minutes. I'm going to have a cup of tea. I'm going to just look at the markets and then decide what we do on some of these open positions. Most of these are monitored by my team. JP Morgan's ripping up at the moment. I love it. I'm long on this as well, not just on the indicator, but actually my 12-month investment. I've bought some JP Morgan, so I need to just make sure the team, well, you guys have made me money, because that's the highest it's been since we started. So I say that whenever it happens on a webinar. I'm not sharing the profits with you, but thank you very much. That's been wonderful, and it's continuing higher, and all these arrows are pointing up. Those arrows, by the way, are just more like a traffic indicator for me. It just gives me an idea of the sense of the strength. And of course, if they're all green, then one of them's got to turn red next. So I can imagine somebody's going to start taking profits on this in the short term and start pulling it a little bit lower, but I won't be panicked because I can see the other four are still green. Do you see what I mean? It just allows me to, if I scan during the course of the day, go, oh, okay, it's fine, and so on. Now, we added to that winning position here at that red dotted line. So we've got a double position in this. The genius of that is we can start small, knowing that we can add to a winner when we've got profits. We always like to risk profits, not capital, okay? For a very simple reason, that capital is the most precious thing in the world. Profits, well, they're there to be risked. They're risk capital, as it were. Okay, on that. When is the next investing webinar? Michael, I think might be next week. Next week, I think. Which is the next? Thank you, Imtiaz. Delighted to have you on board, my friend. And I had a friend at school called Imtiaz. You didn't go to Full Net Boys, did you, by any chance? A really good friend of mine, really nice person. So thank you very much. And Robert, thank you. This was great. Thank you. I participated today out of curiosity. Good. I want to check with my wife to ensure doesn't object after 29 years. Happy wife, happy life. Can I get back to you? Yeah, I'll hold a place for you. Don't worry. And I think, Robert, I think you do the absolute right thing. There was a time when men didn't do stuff like that, but I definitely think, and I'm the same, by the way, on virtually everything. I check with my wife, and I think it is really nice that people do that. So good on you, and good on you for saying so as well. I think you're absolutely correct. I have quite a few, actually, funnily enough. They do it as a husband and wife team. They say, actually, I can learn together. And by the way, we don't have any objection to that. Some do it with their children. Some do it just for their children. Oh, by the way, I forgot to say, when I mentor, I do 360-degree mentoring. That means if you've got career advice you want, if you've got advice you need on networking, business, I've got some people whose businesses I'm helping with fundraising because they wanted some advice on that side of things, or their kids getting apprenticeships in, I can't guarantee anything, but, you know, getting into university or whatever else. I've mentored those. I've got 2 that I helped get into Oxford last year who were on the program, 2 who weren't. But yeah, once you're on the program, my mentor always mentored me beyond just the area which I would ask him on. So I have the same principle. And I think I had one person then point out to me, he says, oh my God, you've got a unique selling proposition. Nobody else out there can do that. Given your networks and credentials and all the rest of it, you can give them advice on the business side or this, that, or the other. That's phenomenal. That we want that, you know, so I'm happy to do that because it just gets the word out even more. You know, I love that part of it. So no issues with that at all either. Is there anything I've not shown you? Yeah, we have a WhatsApp group for the students as well, where I'm on it, my team are on it, so that, you know, some of them different, depending on what time zone they're on. If I'm asleep, my team will pick up the WhatsApp. I'll check it in the morning. At least they've had a response straight away. We had one person who said, which currency spreads? Look, can I open that one? I'm not sure I can open that. 8 most important currency pairs are, and then he's asked which currency pairs do you like in particular. So I've told him, or rather Paresh has told him in my team, which ones have the lowest spreads. So he's given him, because he wanted to know which particular pairs do you look at the moment? And we'll handhold you through the account opening with whichever broker you choose. Will you send an email with the link after the webinar, please? I would also like to check with my husband. Stacy has just recently paid out for an annual subscription, which turned out to be mediocre. Yeah, absolutely. Stacy, I hear you. I hate annual subscriptions because you're locked in for the whole year, you know, and they make them cheaper. They say, oh, if you pay annually, you pay less. Why? Why are they giving such a discount? Because they know they're going to turn out rubbish. You're going to regret it, but they know they need to get you locked in. Why do they need to give you a 25% off if you pay in advance? That's not the interest rate in the banks that they're saving on by getting your cash earlier. It's just so they can lock you in. That's why I say there is no subscription. I hate all those little tricks that they do. Okay. We've got some people who say, I got busy, I've come back to it after 2 years, Alpesh, can we start again? And I said, yeah, no problem. And they're shocked. They go, I can't believe you reply back, you know, great customer service, etc., etc. And we have a load of those. We actually have a whole wall of love as well. So as well as the sort of big names whose testimonials you'll see, we have regular people whose testimonials we have as well. You'll find it on the pipspredator.com website. I'll just show you it now. Where's the wall of love? There, I call it the wall of love. This is the wall of love that we have, and some are on Google and elsewhere and all the rest of it. And it's not just for pipspredator, some of it's for my other work and so on. But yeah, we've got a whole bunch of people who can then you know, so we started collecting those as well more recently, and it's been fantastic. It's been fantastic as well. So there's a whole bunch of reviews and out there. What's the WhatsApp group name? Oh, Rohin, email me. That's the private WhatsApp for pipspredator users. So Rohin, if you're on pipspredator, just email me and we'll make sure. You should already be on it if we would create it when you signed up, but just message me. Jag, just very fantastic. Do you send a welcome pack detailing all features and how? Yeah, exactly, Jag. You will get an email, but you'll also get physical signed copies of my books and the manual physically as well. But in the email, you'll get the manual, the digital download, and all the rest of it. So you can start immediately this afternoon. Just allow me, as I said, 20 minutes to send this through after the webinar. Just get a cup of tea and just check some of the trades and what's going on with the markets, because it's been a little bit of a time now. Okay, so just give me that time. And also, one of the things I'll want to check is what the heck has just happened. Well, that's the US open markets for you. Fantastic. So Google, as you can see, we had that, and then it's just shot up. Well, that's good news. So you guys have been really lucky for me. I don't want to go. So that's, oops, there we go. Let's just clear this. Yeah, so that just opened, obviously, since the last time I did. Actually, I've still got the notes on the screen from the last time I showed you. So that's what I showed you last time, and you can see what's happened. The US markets have opened and it's jumped up higher, and we captured it. So there you go. There's the live reality. Of course, it could have gone wrong. I mean, I don't want to sound like, hey, wow, just look at me, I'm a genius. That's not the case. It's because it could have gone wrong that we don't put every single penny I own into that trade. Okay, just in case you're wondering, wow, that's so amazing. How come you don't own all the money in the world? Because it could have gone wrong. And it's always that caution you've got to keep in your mind, because sometimes people get over exuberant, they get overexcited, they get over all the rest of it, and then they trade too large. And I'll be the one holding you back, and you'll go, God, you're like my dad. Why'd you keep holding me back? Why'd you keep holding me back? To slow down. Well, got experience. Yeah, fantastic. Ryan, you're on it. You joined on the 14th of January 2020. Is this the group on WhatsApp? Yes, yes, yes. Ah, you've moved to, what's NI? Northern Ireland. Fantastic. Belfast, I assume? Love Northern Ireland. Absolutely love it. It's so underrated in terms of people not realizing just how beautiful Northern Ireland is. And Ireland itself. What happens when the market gaps? Well, you've seen it. What happens? But I think what you're asking is, well, what if that went the wrong way? Which is why we have to ask you to do smaller position sizes. Because let's say that went the wrong way, which hopefully it wouldn't, but I can't guarantee it. Of course, I can't guarantee it. But you've just asked. Hopefully it'll go in your way. Usually what happens with gaps is they're infrequent, and the number that go in your way are usually cancelled out by the ones that don't. Hopefully, more going your way than don't, but that's why we do smaller sizes, because again, that could happen. I'd normally say to people, don't open on Fridays for the whole weekend, because you can have gaps by Monday. Can you please briefly explain the team in the money for option? Explain the term in the money for options. Imtiaz, should I do that on email? In the money just basically means is if something's trading at, say, $100, for argument's sake, the stock is trading at $100, then the option, the call option, might be at $90. Okay, strike price. And I'll have to explain these terms to you in more detail, but it means that it's $10 in the money because it's below the actual price of the stock. And for a put option, in the money would be that it's on the other side of the 100. Okay, so it just affects the what's called the delta and the amount of risk you're taking. If it's deep in the money, and it expires, say, at the same price, well, at least you'll get some of your capital back. Whereas if you traded out of the money and it expired, come the expiry date, you'll have no money left. So you're risking 100% with out of the money options if the price stays the same, and within the money, you're not risking 100%. So that's why it's a risk reward thing. But options trading shouldn't be explained just over a quick thing. Let me explain it in more detail properly to you. I'll do that over email and show you some of the resources. Why does the market gap? Are there any times to watch? Yeah, US Open is the main time to watch, and similarly for Forex actually, but certainly for stocks, it'll gap. That'll be the main point, all around earnings, and we'll give you a heads up on that. I mean, it's pretty straightforward. It's always the same time each day, but that kind of gap doesn't usually happen. It's happened twice now in Google in such a short space of time, and we've benefited from both, as you can see on that. But on the whole, that doesn't happen that frequently, actually. It's just that it's happened twice with Google. I think there's just a lot of stuff going on. I don't know what the news item is. And that's the other interesting point about the indicator. If you look at this and what you can see on screen and the profits that we've made from it is, I don't know. I was on the call to you guys. Well, wait a minute, Alpesh, you made money whilst you don't even know why Google went up? No, that's what trend following is. We remove all that other information. We are not trying to second guess the market. As well, I think we might have run out of licenses, my friends. I've kept two to one side for two of you. Hi, Alpesh, can I join the program? Jump back in. Yeah, absolutely. Life got in the way. Perminda, that happens a lot, and that's why we don't charge a subscription, and we don't charge, saying to you, oh, no, you've got to keep paying this, or rejoin it. Oh, you got to pay this, you got to pay that, because life gets in the way. We have a lot of people who say, oh, I'm watching this, Alpesh, I might not be able to get into it until 6 months from now or 12 months from now. And I say, that's fine. At least you've locked in the price. By the way, don't forget the price has gone up 100% in the past, I think, year, or is it year, 18 months? And it might well go up again. I'm not saying that to be unfair. I'm saying that because as we get more people, resources get more tighter. So it's just the fair thing to do. But the main reason it went up is because we saw the kinds of ridiculous sums some of them were making, and I felt stupid. It's like, hang on. I mean, you might say, why don't you just make it for free? Well, if it's free, nobody's going to respect it or value it. They're just going to say, but when you charge a bit, you've got to charge the right amount that you don't feel so stupid that they're making so much money and it's unfair. And we do say to some of them, I mean, we can't force them. We do say, I'm chairman of a charity launched by Lord Lumbar, called the Lumbar Trust, which supports widows and orphans. And I say, well, if you're minded to give a little donation to that or any other charity, that'd be wonderful, especially when they've had a windfall. Then it's great. But yeah, we were feeling a bit stupid with how much money some of them made. One guy, he built two $10 million companies. You can see it on alpeshpatelreviews.com, two $10 million companies. And I thought, and people were saying to me, Alpesh, and you just charged him 2K? Oh, I think at that time it was 1K. So yeah, we increased the price and we might do it again. It's just that it's just not fair otherwise on us. We just feel a bit silly, don't we? So that was the reason. Perminda, just email me, my friend. No issues. And yes, you'll get the invite to my monthly sort of get-together networking. At the last one, we had hedge fund managers there as well, so you got to meet them. So we had someone from Millennium, somebody from, I forget which other hedge fund it was. I think it was Man Group. So you'll be able to meet other ones as they're in the industry. And it's a good networking event because it opens up doors. And I often tell people, if you want to bring your kids, do, because it helps them if that fits with you. I've got other people who are retirees, and they say I had everybody from 20-somethings to 70-year-olds who were there, and it was just great because the energy was fantastic. I don't give a speech; we just network, eat samosas and pakoras, and it's on the Strand. And so I'm going to do that every month as well for you guys. Okay, okay, I'm going to get going now. I've had this awful headache, which is not your fault. It's because I've got this cold, and I've not been that well. So forgive me for doing it with a cold, and I hope I didn't sound too rough during that period. All of you, thank you very much for signing up, and all the ones who've signed up, I will send you a onboarding email, download link, so you can download it immediately, get you onto the 12-week course. Just give me about 30 minutes or so, just so I can take probably some paracetamol and just have a look at that Google and JP Morgan trade as well. Thank you for that as well, you guys. I always assume it's my audience who give me any good fortune during the course of a webinar when the trades work particularly well. Thank you, Imtiaz, and I hope to see you in person. All my apprentices, I want to meet in person. I want to assist them in, it's not necessarily just trading. Some of them, they wanted to get jobs. They wanted advice on careers. They wanted advice on all sorts of things, business and whatever. I try and open up all my LinkedIn networks to them as well. And LinkedIn's a good way of judging someone, because, you just look at who their networks are, because presumably they won't be connected to them unless they're the real deal. So I try and open up my LinkedIn networks with them as well. And and I should say, all my apprentices connect with me. Everybody else, please just follow. So I only connect with my apprentices because I'll know them, but everyone else can follow me, and I'll open up my networks to you as well. I just posted this one this morning. This one I had, it was a bit thinner then, and it was about motivation. Because it's about this time in January people get a bit demotivated with their lives and stuff, apparently. So I don't just write about trading, but I'll write about just broader things as well on there. So that was a nice one to post, and it's about surrounding yourself with positive people. I think the king is probably one of the most positive I've ever met. He just always seems to have a smile on his face, and always just laughing, even those meeting strangers, complete strangers like me for that matter. And I don't know why he's bowing. I don't think he is. I'll be sent to the gallows for that. But I do give other sort of mentoring beyond that as well. Okay, everyone, thank you. I've kept you long enough. I appreciate you all being on here. And those of you who've wanted me to keep it for the weekend, I will drop you an email because I've reserved the space for you, so that's not a problem. But let me remove that off the screen. Thank you for being on the webinar. Like I said, apprentices, I want to meet you in person. My ambitions, I've laid them out. You might think you're not going to get to $1 billion in 10 years. We live in a world where ChatGPT gets valued at $30 billion in its time. You might say, well, this is not as good as ChatGPT. Actually, you know what? Like Google, it scans a ton of information to find what's valuable to the user. And given that trading online is a multi-trillion-dollar business, trust me, I know, the international... Can you see it there? Okay, the international bestseller sort of proves it. I think that's the camera point at the correct focal length. There we go. Proves it. This is a market which, well, if I didn't do it, who else was going to create the software? If I don't sort of push the credentials and say, look, this is a worthy thing worth doing, as we thought 25 years ago, before all the Instagrammers sort of ruined the market and all the sort of know-nothings and the terrible people out there ruined the market, then who else is going to do it? So, and it became very financially lucrative for us to do a company which could get to $1 billion valuation, but it'll only do that if it's got global reach. So that's the overall ambition. Thank you all for being part of the journey. I shall leave you with that. Thank you.